What is going on, everyone? This is Andrew O'Connell with Pristine Capital. I am also the Director of Research at LeDuc Trading, coming at you with yet another market recap video. It is January 15th, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to talk about the price action, the indices, volatility. We are going to cover a lot today, just about how to take a drawdown and, just how to sort of like mentally be okay with drawing down, especially when you're a trend follower. We'll go through the trades that I took, which I did a lot, and then we'll wrap up some options order flow. But before we jump in, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. So let's jump right into it. So first of all, today is OPEX. OPEX is always, my favorite day of the month because, if you're a full-time trader, you're pretty much like spinning your wheels the entire month. You're operating within the markets. You're doing your research in the morning for market open and after the close. So OPEX is like a good chance to just be like, let me see how I did this month, and let me just reflect, let me take a little break, whatever. And it's awesome that we actually have a 3-day weekend coming up too. But let's run through these box scores. Today we got that volatility that we've been talking about for the past couple days. So we had S&P 500 down 0.73%. We had the NASDAQ QQQ down 0.79%. We had the IWM small caps down 1.49%, and we had the Dow Jones down 0.58%. So let's jump into it. There's going to be a lot to talk about here. So the S&P 500, we've pretty much been trending sideways, for the past month or two, like we've been discussing. After the Georgia Senate runoff, we had a really nice push up in the S&P 500, a really nice couple days. And for the most part, we've been moving sideways. Now, the kind of like nuance when you're having like this really tight price action is you can get a pretty big move depending on which way you break. And the reason why is because so for instance, today, we broke to the downside, essentially in one fell swoop, only going down 1%. You now suddenly have like 1, 2, 3, 4, 5 candles of S&P 500 buyers that are now underwater. Same thing, like say if we were to have like a 5% correction, God forbid the market goes down 5%, you would probably slice through all of these buyers from like the last like month or two. So that's why like when price action gets like very coiled, you can get some pretty big moves. But let's jump into the hourly chart because I think the hourly chart tells the story much better. And this is sort of like my north. Once things get a little ambiguous in the indices and it's not just like a smooth sailing uptrend, that's when I start paying more attention to the hourly. So you can see here, we had mentioned this maybe like once or twice past week. We kept dipping into the weak value area, right? Every time we did, dip buyers came right in and supported the market. Yesterday we moved into the weekly value area, but we didn't really get that support to just push us right off of it once more. So like I had been talking about this for the past couple days, maybe 3 days ago, I added an IWM hedge off of that Charlie McElligott gamma squeeze article, and that just intuitively made sense to me because it's like I see everyone YOLOing these call options. Like I'm in Cheddarflow pretty much all day every day, and I see what's going on. And when these dealers are faced with, just call buyers left and right, they're forced to buy these stocks as hedges against those call buyers. So once I saw Charlie McElligott talking about come this OPEX, there's going to be a lot of gamma rolling off and a lot of those hedges rolling off, I sort of knew I'm a trend follower. I'm not going to just go net short in an uptrend. But I added some hedges on and knew okay, the trend might change pretty soon. So have at least some sort of hedges on and then just be very quick to, once you see it change, take some risk off and just let your hedges kind of do their thing and not like blow yourself up or take a really big drawdown. So today you can see we actually dipped down to the monthly or the weekly point of control, and we actually closed below that point of control. So, if you've been watching my videos, I really just play the market level to level. And so now we have the point of control at 37.53.25 above us. And the next downside level for the market is this 36.89.75. So right here, things are still pretty ambiguous. We could just power right through this. But now we're sort of in that gray area where, could this be a little bit of a downtrend we're going into? Typically what I do is once I start seeing the market making lower lows and lower highs, I'll just draw my trend lines just to sort of like mentally get myself in that groove of maybe this is a downtrend. Because for me, for instance, like in 2020, I didn't really handle some of these drawdowns that well. So like this drawdown, I still have my trend lines drawn. I sort of got a little stubborn in here. Over here. I think I was actually positioned pretty well for this initial like red day, but I'm pretty sure like by day 2 I was like buying the dip. Oh, what happened here? Yeah, like by day 2 or something I was trying to buy the dip, and I sort of got caught up in here. Took a sizable drawdown, and luckily on both of these occasions I was able to just continue buying in here and make all the money back and more as we took our next leg up. Same thing here, made it all back and more. But I could tell for both of these market drawdowns, I sort of got caught off guard. I was caught wrong-footed. I was a little too stubborn on de-risking. And, I could sort of attribute it to luck maybe, just like that the market accommodated me and sort of like went the correct way. So I knew I didn't take those drawdowns the way that I would have liked to. So for this one, I was like, I'm going to go by the textbook. So I had purchased the IWM hedges a couple days ago. I purchased the SPY hedge yesterday, which I talked about in my video. So today I did take a drawdown. Like I drew down like a good 2 to 3%, but I had my hedges on and I actually took off a lot of risk very quickly. I had stops set coming into today, and I got stopped out of a bunch of my positions. So like for me, okay, I took a drawdown, which is like not really like the most fun thing in the world. But as a trend follower, days like today are where I'm supposed to take a drawdown. Really like the objective for me, and like if I want to be like a better and better trend follower, is like how can I minimize that drawdown? How can I not get caught wrong-footed, that sort of thing. And I think I did a good job of that today. So yeah, for me, it was like a 2 to 3% drawdown, but I'm really proud of, the way that I executed today. Yeah, so I would just keep watching the hourly chart. Yeah, and I would say until we clear, that upper bound at like 37.90, in my opinion, it just makes sense to be like a little bit more conservative. That's all. You don't have to be like bearish or anything, but just be careful. That's about it. And just, watch your risk, watch the short-term options. That's another thing. Like I started noticing within my own ecosystem and like people that I talk to, I've just been hearing a lot more about like the words like margin. And like I'd never really heard before. A lot of people talking about like, oh, I'm trading these weeklies, stuff like that. And that's where, like, if you're a weekly player, it feels so good when you're just ripping winners all the time. But then you have one volatile day in the market, and suddenly you're, like, just in a bad spot with your portfolio. So I would say, like, if that happened to anybody watching the video where, like, you sort of took a bigger drawdown than you would like to have today, like, trust me, that's happened to me. I just went through all those times that happened to me. I would just say, try not to be stubborn with your positions. It's okay to cut the losers and then just come at it with a fresh perspective. But just don't be stubborn or anything like that. And then, let's see. So we have the Qs. Pretty similar story here. Yeah, I'm just going to be on the hourly chart. Yeah, you can see the Qs fell into the weekly value area, and they're approaching the weekly point of control. IWM. IWM. Hey, you can see this one still remains, the most bullish. And IWM still hasn't even gotten into the weekly value area yet. So this one, like I put a hedge on here a couple days ago, but this is still pretty bullish. So I'm fully expecting, like, I could just get toasted on that hedge. I have it on for February, but we'll see. And then the Dow. Also jumping into this weekly value area. And, we're also approaching that weekly point of control. And so if we look at our sectors and style factors, really like what I've been priming my brain for, this this gamma roll-off, so to speak, it's sort of making sense given what we're seeing in these sectors and style factors. So when you think about like a gamma squeeze on the way up, it's a lot of these like momentum areas of the market and the high flyers that just continue to rip and rip. And as people continue to pile on to call options, these things will go parabolic. They'll make really nice moves. And, a lot of good money-making opportunities. But what I saw today is, the sell-off is more so concentrated in a lot of those high-flying areas. So let's pull this up. I actually have I'll just pull it up in the PowerPoint a little bit easier. So, you can take a look. Like cannabis, which is a space I'm really bullish on, took a sizable hit today, down 2.63%. You can see retail, which had been on fire, down 2.36%. And that one has like Blink and MGNI in the top holdings. But yeah, look at like energy and solar. Look at solar. Fell out of one of the top slots, down 7.24%. So if you think about it, that was one of the most high flyer areas of the market. If you're thinking about like a gamma roll off, of course it's going to impact those high flying areas. So what I want to do is like I already told you guys, like I took a drawdown today, the whole 9, but my goal is like to just stay balanced, where I feel comfortable now, where it's like I took my drawdown, awesome. But I feel like with where I'm positioned now, if opportunities start to come up, I can jump right on them. So like solar stocks, it went a little crazy. Now they're going to have this pullback. But, solar stocks is an area I definitely want to buy the dip in, as the dust starts settling here. Definitely not today, but eventually when it happens. And then gold miners, still just, really struggling here. Yeah, you can see for the most part some carnage. Healthcare was a bright spot. I added a healthcare name today. Medical devices, telecom, real estate, and utility. So a lot of those more like defensive areas of the market finished green. And then, if you look at the style factors, we have the cyclicals down 1.52%, just getting hit over the head, and high beta, getting hit over the head. And I even saw this intraday where, like, this is risk off when you see the only two green areas of the market are defensives and min vol. Like, what is that telling you? It means people are, like, de-risking. They're trying to find cover. So this, to me, it's like, the grand scheme is just a little dip, but the price action and what areas people are going for definitely tells me like there could be like some deleveraging going on or whatever. And so for trades, I had so many trades today because I came into the day with stops on all of my like non-core positions, and I just let the stops play out. And then there were some additionally where I didn't even have stops on, and I just closed them out. So like PDD, I put this one on, I believe it was yesterday. I tried to buy the dip. PDD, I got stopped out for like a 5.6% loss. And this one, nothing wrong with my process here, in my opinion. Just like, I'm a pretty harsh critic of myself. I was trading this one against the 20-day simple moving average. And basically say like I'm bullish above, bearish below. We closed below the 20-day, so for me, perfectly fine. I took my shot, and I'll take my paper cut loss. SPCE, I talked about this one the other day, how I entered in the after hours for about like $29.80. I got stopped out of this one at $30.88. So close this one out, with a very small scalp winner. But something like SPCE, I don't want to hold that through a drawdown. And if I'm positive in a trade in this company that has no revenues, I am not letting that go to a loser, because that's not one that I want to sit with on the book. For a small scalp winner, GBTC, this was one where, pretty much luck how this ended up happening. But GBTC, I closed out for about like a 10% gain on my recent ad. And I actually closed out all of my GBTC from prior ads as well. So like GBTC, I just noticed. So, it's been on a nice run. I bought this one on the day, a really nice entry. And, I was sort of in my mind like this gamma roll-off thing could happen. And I know BTC is just super volatile. So I had a stop order pretty much set to just take me out pretty much if this thing goes below, the closing price yesterday. And I got taken out of this one for, I believe, like $42 or like $41.80. So I was able to save myself from like a couple dollars of downside. And GBTC is one that I definitely want to get, back into it. I definitely think Bitcoin is in a really strong trend. I want to keep participating. EOS is actually one that I bought on the dip today. This one might not end up being a super smart trade when I look back on this one in hindsight. So EOS, I just saw that it tagged that monthly value area high. This one has been the victim of a short report. I've been reading some of the commentary from one of my favorite analysts talking about it. And from his perspective, on Twitter, it just seemed like he was of the mindset that like maybe this thing wasn't like a buy at $32 up here, but he still seemed pretty bullish on it. And like given this just, it's had like 4 down days in a row and dip buyers were coming in, I purchased some common shares on this one. But we'll see. This one is not like it was showing like relative strength. It still closed down 6.23%. So this one, I think if I were to do this day over again, that would probably be one decision that I don't make. Although it's not like the worst trade, I don't think it was the best either. And another one that I entered today, which this one I would make the same trade, 10 times out of 10, was Progeny. I noticed as the day was rolling on, so I came into today with a pretty defensive mindset, and I noticed like all these things are getting hammered, and Progeny was just like continuing to advance throughout the entire trading day. And I started looking at the company a little bit. They're a fertility management company, which makes a lot of sense. Like, if you can solve that problem in terms of people, trying to have children, trying to not have children, that sort of stuff, it's just something that I think makes a lot of sense in society. I looked at some of the analyst estimates and saw that they were pretty strong in terms of forecasted earnings and revenue growth. And this one, it was literally like the strongest stock in the market today. This thing was just defying gravity. So I was like, I got to jump into this one. I got in somewhere around like $47 share. So I got in, pretty much towards the highs of the day, but up a little bit on that position. So we'll see what happens with this. But to me, this was like a screaming buy. I was like, I don't know what's going on, or if there's about to be like some news announced to this company or what. But this thing is just super strong. So I had to get in. And then there were a bunch of other trades I had of just me like stopping out of things. Like I stopped out of NTLA, I believe, for some gains. So it was all about just like protection for me. So I think I had a stop set at like 82.50 in this game, and it got hit. So I got out for some profits, which is cool. But there were a bunch of others that I just got taken out for profits or taken out for small losses. So yeah, I really just cleaned things up for the most part. Because now, like, I took my drawdown today. But then, if the market continues to just, keep slipping, then I'll feel comfortable where it's like, all right, I'm not taking much damage, if any, and now I can be really objective about trying to buy the dip. So that was sort of what I did today. Now let's take a look at the options order flow. Close this one out. So there was a lot of flow today. I posted this a little bit earlier, but end phase is one that I consider it a core position of mine. So that one, I did not sell, even though the position was down today. I'm still up on the position, but it's nice to see, like, when you have a core position and call buyers are coming in to buy the dip immediately. The end phase, yeah, you can see also took a big hit today along with the rest of the group. Yes, this one, oh my gosh, yeah, down. I believe my cost basis on this one is like 175. Yeah, I probably bought it. Which candle did I buy it on? Maybe it was on this candle right here. Probably was. But yeah, it took an 8.73% hit. It's pulling back to the 20-day, which to me could end up being a good buying opportunity, so we'll see. More Tesla activity. I noticed a lot of activity in Zoom. Yeah, so you can see these Zoom February, Zoom Januaries. Yeah, all really short-term stuff. I'm wondering if people are just like, yeah, it's an $11.9 million play. Yeah, more January, super short-term. Yeah, these are all really short-term orders. So I don't know if they're just trying to take delivery or what. Let's Zoom. Let's see. Yeah, Zoom, so it's above the 20-day now, but below the 50-day. And you can see that's where it ran into issues, prior, where it just like closed above that 50-day and then boom, just took another leg down. Here it got stuck at the 20-day. Now it's trying for the 50 again. Let's Zoom. Yeah, this doesn't really look the best. So it broke into the monthly value area, but it pretty much faded throughout the whole day. And, now it's really testing the value area low. So this might end up being, for me, a short setup coming up. Because I see all these guys piling into calls. And it's like, for me with Zoom, I know it's an awesome company. But it's like, if I wasn't trying to pile into Zoom, like, all throughout here, this whole uptrend, it's like, why would I try to pile in, like, now that it's downtrending? I don't know. I'll probably end up being wrong on that. It'll probably just be like, just move off to new highs, but I don't know. Then we got some AMD puts. What's been going on with AMD? I feel like AMD is the name of, like, everybody on Twitter. Like, we all tried to play it at one point, and it just never really moved, whereas some of these other semis, really took off. So yeah, AMD is not really looking so hot. Looks like they're shorting it. Oh, we got some Facebook activity. What's this WBA for April? I wonder if this is like a regional bank or something. Oh, Walgreens Boots Alliance. Oh yeah, this one has been on a really nice run. Healthcare, pharmaceutical retailers. But that about does it for the options activity today. Thank you so much for tuning into this video. Really appreciate it. Hope everyone gets, a nice little break today for this 3-day weekend. Some nice relaxation time. And then I will see you all next week. Have a good one.